CLOB competitors, this is everything you need to know. There's a new race happening in crypto, and it's not about airdrops, layer 3s, or the NFT mints. It's about who can build the fastest, most capital efficient, and most composable trading infrastructure on chain. It's a battle of the CLOBs, central limit order books, and it's heating up fast. Previously, we did a general overview of CLOBs, what they are, why they're so important for DeFi 3.0, and we also did a deep dive on Hyperliquid and Bullet. But today, we decide how to expand the scope and provide an overview of the CLOB wars battlefield. We looked at the majority of the CLOB competitors. We've done a deep dive across white papers, docs, Twitter threads, and live protocols to map the landscape. We're going to walk you through this. We'll tell you what we've found, including the leaders, the challenges, and why we're placing our bet on the promising protocol, Fogo. So let's dive in. So we'll start here with this doc so you know what we're going to cover. This is what is in store for this video. This is just one small section of all the research we have done. Before we start, this is not financial advice. We've built this comparison based on public documentation, community research, and our own testing. But like everything in crypto, things move fast. Some of the numbers may already be outdated or incomplete, and we welcome your corrections in our comments. This video is meant to spark discussion, not close it. If you're here just for Fogo, then this will be covered at the end, so stick around for that. Meanwhile, let's start with competitor number 1, Hyperliquid. It is a giant in the room. This is arguably the gold standard for on-chain clubs right now. Hyperliquid runs its own custom L1 with sub 100 millisecond latency, 200,000 TPS, and a matching engine that's fully enshrined in the chain. There's no VCs, no off-chain sequencing, just pure performance optimized infrastructure. It's fast, it's sleek, and it works. If you want to understand the appeal of clubs on-chain, Hyperliquid is the reason everyone's paying attention. However, there are a few concerns that might need to be addressed by the team. The first one is they run in a single data center, and it's not an open source project, so you don't know if you're being speed bumped. These do not necessarily impact the speed of trading, but we just don't know, and they can pose a risk to the confidence of traders. Regardless, they have market share right now in the DEX club world. Next is DYDX, the OG perp DEX. They were the first to prove a hybrid model that it could scale using off-chain matching on Ethereum v3, and now they live in the Cosmos app chain world in v4. The goal, push toward decentralization, but it's not still quite fully off-chain. Matching is now handled by validators, which is a step forward, but the architecture still lacks the full composability of an EVM or SVM chain. Still, DYDX deserves respect. They define the space, but they may not own it much longer if they cannot improve finality and handle more volume. As I mentioned though, DYDX is OG, they already have a token, and they've got a lot of experience. Another project that deserves respect for being early is Synthetics. They are now innovating with a perps DEX to be launched on Ethereum L1. We did not do a thorough analysis because there isn't sufficient information. However, we can gather that the order book will be managed off-chain, so it will be a hybrid model. It sounds like high performance might be achieved, but with decentralization trade-offs. Now let's move through some of the other players in the space. We've got Deepbook. Sui's Deepbook is purpose-built for trading and natively integrated. Fully on-chain and fast, but still very early. It needs more transaction and ecosystem buy-in. It has been talked about by Raoul Paul, and the backbone of Sui DeFi liquidity is this slogan. Next, we've got Bullet. They're going for speed, sub 5 millisecond latency, which is very impressive. It uses a hybrid Solana-based network extension. It's a bold bet on performance, but unclear if it will be composable or decentralized enough long-term. In particular, we're still not entirely sure of the trade-offs of the zero-knowledge proof system that's on their roadmap. The founder is very vocal and credible in the space with experience running Zeta Markets, which is a previous iteration of Bullet. They already have a token, it's called Zeta, and unsure exactly how it's going to transform to Bullet. You'll have to check with them. Next up, we've got Lighter. Lighter is an ambitious hybrid CLOB. Similar to how we think Bullet is designed, rather than storing the order book on-chain, Lighter handles order matching off-chain, but cryptographically proves that everything was done fairly using ZK proofs. The result, a claimed latency of under 5 milliseconds. But of course, this comes with trade-offs. It's not composable, decentralized, not as much, and it's still early, as they're still on testnet. Still, if you're chasing pure execution speed with cryptographic integrity, Lighter is one to watch closely. MegaETH. This is an Ethereum L2 using EigenDA with big claims. 10 millisecond latency and 100,000 TPS. But it's early, seems to have a centralized sequencer, and it hasn't proven live trading performance yet. However, their spot DEX app, GTE, looks amazing, and they were super successful raising capital via VCs and community. It is clearly a strong contender, particularly for those traders that do not worry about censorship resistance. In simple terms, censorship resistance means no single validator or group can prevent your order from being included in the blockchain. Next, we've got Sei. It's another general purpose chain leaning into CLOBs. They're planning a huge upgrade, say Giga, targeting 200,000 TPS. But right now, they still rely on hybrid models and are far from those numbers with the current setup. Say has been around for a little bit of time, and they've got a bit of on-chain TVL. 500 million is not bad. If they pull off the upgrade, this could be a horse to bet on. Of course, nothing's financial advice. Next, we have Injective. It's a multi-VM L1 across Cosmos, Solana, and Ethereum with a finance-first focus. It's one of the older players, but its architecture is complex and not fully composable like Fogo or Hyperliquid. They do have the advantage of a respectable team that managed to establish partnerships with major names like Coinbase Institutional and NTT Digital. But there is a red flag. The red flag for us is TVL is very, very low for such a high token valuation. Monad. This is an ambitious EVM compatible chain. 10,000 TPS and huge testnet activity, but there's still no live CLOB yet, and performance under real-world load remains unproven. Community seems to be a strong backbone with records of 7 million daily active addresses. However, it's very important to know that a lot of those are bots and bot farms, and that is just the nature of crypto. Next, we have GVRT, ZK Sync based. This is an app on ZK Sync, which is an L2 on Ethereum. It's still early stages and seems to be pre-token. Definitely one to watch. But it's not a serious contender yet, judging by the very low TVL if you check it out on DeFi Llama. Also, all characteristics on running on an L2 apply. So why are we betting on Fogo? All these projects are exciting, some are battle tested, others are high risk moonshot. But Fogo stands out, and here's why we're building on it. It's fully on-chain, the order book, the matching engine, everything. It lives inside the SVM, and it benefits from enshrined Pyth oracles with millisecond pricing. It's insanely fast. 40 millisecond block times proven during testnet and will run on Firedancer. We're also confident that this sub 100 millisecond performance will keep getting faster. It's composable. Fogo is purpose-built for attracting institutional grade finance. You can build on it. It's permissionless. Plug into it, integrate strategies, vaults, LPs. It's friendly to market makers with zero taker fees, Oracle-based orders, and frequent batch auctions that eliminate MEV. Fogo and its dApps actually level the playing field. And the user experience? One click, zero gas, Infinex integrated. It's the closest thing to trading on a SEX without giving up custody. And last but not least, the team is optimizing for performance without trading off decentralization. This is why they implemented zone-based consensus. This is summarized very well here. Minimum viable decentralization, maximally optimized performance. This is the kind of architecture that doesn't just copy Hyperliquid. It builds on the idea and it makes it composable for the next generation of DeFi. Currently, Hyperliquid is aiming to grow HyperEVM as a result of being composable. However, we have a feeling that Fogo and its contributors have such a strong network in DeFi, in particular with the team at Pyth Network, which is essentially business developed with every app in crypto, that they can be a serious contender in this race. That said, this isn't a zero-sum game between Fogo and Hyperliquid. We believe both are building powerful ecosystems and both can succeed by pushing the frontier of on-chain trading in their own ways. We're betting on Fogo, but we're still early in this journey. There's no public testnet out yet. It's coming soon. If you think we missed something or if we got something wrong, tell us in the comments below. We'll be updating this comparison as the space evolves. And we're excited to see which horse crosses the finish line first, because when the on-chain CLOB model wins, everyone in DeFi wins. Regardless, it's all about growing the pie. Remember, stay curious and be Fogo fast.